We're coming out of a week in which the market digested the latest Fed policy decision and monthly employment report out of the US, and yet most of the attention is elsewhere, with market participants more focused on fallout from the US administration's latest round of tariffs on China. As we look at the overall landscape, what's become clear is that with central banks committed to keeping pace with the moves over at the Fed, the monetary policy impact on currencies is becoming less relevant. And so, if central banks are going to keep pace with each other's moves, it's going to be something else that drives currencies, and that something else is U.S. trade policy. Thursday's tariffs clearly showed the impact of trade policy, with a strong dollar in the aftermath of the less dovish Fed read finally coming under pressure to close out the week. U.S. equities were also on the move, already feeling the heat from the less dovish Fed decision, and then accelerating to the downside after the U.S. tariff announcement. Looking ahead, it will be interesting to see if the dollar starts to reverse course and if the euro and pound can push out from plus 2-year lows. The pound has had the added headache of Brexit worry to contend with, though, as per the Bank of England last week, Brexit tail risk aside, and all of a sudden, the pound could be a lot higher with earnings on the rise, inflation objectives being met, and rates in position to move up. As far as today's calendar goes, key standouts come in the form of Australia's services PMIs and job ads, China services PMIs, Swiss retail sales and consumer confidence, German and Eurozone services PMIs, UK services PMIs, and US ISM non-manufacturing. That's all for now.